How long can we talk about a dearth of opportunity at prices that attract him?
Hopefully not too much longer. Our clients have been shareholders now. This is going to be our 20th year of owning the stock, and it was kind of music to my ears this morning when he revealed that he was elephant hunting and didn't bag it, because I think that was my first question in reading the letter. Not much activity in the fourth quarter. Now we know why.
Right.
I've been in the camp that for a couple of years now have said I think the biggest elephant he can bag is in the Omaha Zoo. It's in his own backyard. It's his own company. But I think that he would much rather continue to build out the conglomerate, build out the equity portfolio. But he laid out a pretty cogent case once again in the letter to buy back shares, and so I hope he starts swinging a fatter bat at that pitch.
Yep. He did say be a big repurchaser in coming quarters,
sure,
even though some might have been disappointed by this one.
Yes, and always with the value in mind, right? So I think that's where he wants to draw a distinction between the general kind of buyback, just because that's what we do with our cash decision of a lot of companies, and his own. I also think it's interesting, it seems like a contrast or maybe a contradiction when he says, look, stocks look like a good bet, yet we bought nothing. On the other hand, how does he actually bet? He bets big when he feels he has an edge. If low interest rates and other factors are keeping the asset class of stocks at elevated valuations, he doesn't necessarily feel as if he has that edge or that bargain to buy at enough of a discount to buy something else. So his own stock, by default, might be the better option.
When you're looking for an enormous acquisition to do as well, and given the size of their cash pile, it might very well be. I think it becomes harder to follow the playbook that he has typically used, which is, hey, management, come join us because we keep you can do what you want. We love you. We won't get involved with you. But I don't want you going out there and seeing who else might want to buy you. And when you're talking about a $100 billion deal and you want to read the proxy and see whether they actually took a look around and got a real value, it's just hard for a company in some ways to do the deal Buffett likes to do, where he feels like he can get a really good deal and bring in a great management team and do the right thing by shareholders, at least in terms of making sure you got the highest price.
Yeah, it's almost an impossible situation. I mean, if he wants to buy these good, if not really good businesses that are of that size, they don't necessarily need to come to Omaha and do a deal with Uncle Warren. Now, maybe if it's on the Forbes 50 and it's privately owned, family owned, that's a whole nother thing. But even with that situation, there's all this private equity. I mean, I was actually surprised when he said that they were close
to doing something. Yeah, I wonder what it was. We're all going to try and sort of figure it out.
We can rule out intergalactic companies, apparently.
Yes, that's only on Earth, and I'm trying to remember if there were any rumors around. And listen, he has done large deals. So, I mean, Burlington Northern, Precision Castparts, but the size of what they're talking about now would even dwarf those conceivably if he were to use most of their cash.
Yeah.
Yeah, if it would be. I mean, who knows? I mean, would he consider a $30 billion deal a very large acquisition of a business? Probably so. He doesn't have to use all the cash.
No, and he could do two.
Yeah.
But if he
could find, but he can't even find one right now.
You got this giant float, and if the risk of recession is rising, and if at some point in the coming years we actually get one, he's going to be in quite a position, Berkshire's going to be in quite a position to deploy that capital.
Yeah, and unfortunately, you have to root for bad news for him to swing at fat pitches. The stock's our largest position. On the one hand, I don't want it to go down or to be in an economic environment where he's going to have opportunity, which is going to hurt the rest of the portfolio. But that's what he needs. But all that said, here we are in a very long bull market, maybe the later stages of an incredibly long economic expansion. I mean, Berkshire's, it's his words, it's a financial fortress. I mean, it's Fort Knox on steroids. I can't think of a better company with all this diversified earning streams to weather an economic storm and take advantage of it. But that's more of a scenario in a market that's declining, which we really haven't seen that much of. Right. So there's some frustration there, but I hope he buys back his own stock.
As for lessons out of the portfolio, he talked a little bit about banks, talked about Oracle, the cloud. It remains a challenging hill.
It does. I mean, because Oracle is one of those companies that, yes, it does kind of look cheap if it's just this broad play on business IT spending, but then this sort of admission that, I don't really know if I have an edge here. Again, I keep coming back to that idea that he really wants to bet where he feels he has an advantage in terms of his long holding period, in terms of being the preferred buyer, or in terms of value. And you don't get that in a lot of places. On the other hand, with Apple, okay, I wouldn't buy more Apple here. Okay, fine, you own more than 5% of the company. The company's shrinking the flow. You're owning more of the business pretty much every quarter. You don't necessarily have to do anything. You own $45 billion worth of it today.
Thoughts on the Kraft Heinz deal and the comments he made today about overpaying?
Yeah, a couple of thoughts. I thought in his folksy way, it is a lesson for all investors. I think he was rather cold-blooded in saying, made a mistake. And if I was smaller in terms of my portfolio, I'd sell it, all with a smile. I think there's a big lesson there for investors. I think the other takeaway is that here's Berkshire with $300 billion in equity, $708 billion in assets. Kraft Heinz is just not that big. I mean, I hate to torture an analogy, but it's kind of like Joey Zaza in The Godfather 3. He's not that important. And so, but lessons learned on how he sold or how he thinks about Kraft Heinz as a mistake, and how quick he was to recognize with Oracle, hey, I don't have an edge here. I'm gone.
Yeah.
So.